Hi everyone, welcome back to Be Rich. It's me Vinod here, recording standing today for a change. Usually I'll be sitting in front of the desk, but today Rupesh said it's time I get my steps in and he asked me to stand up and record, so I'm standing. So there's something different. Like a lot of you make fun of my team. Well, my team does motivate me to be different and innovative, I guess. Getting to the topic at hand, which is about what's been happening with the rejigging which is going on in the Nifty. It's made a lot of news, but it is of value and importance to us. There are certain things which are noise, certain things are not noise, and this is not noise. Let me explain to you why this is not noise and you should pay attention to this rejig, because it has direct implication to you. Because if you're a passive fund investor like in the Nifty 50, this has direct impact on you. Nifty 50 passive investing is nothing but investing in the companies which are part of the Nifty 50. So when you buy in a mutual fund, a passive fund, units of a Nifty 50 fund, they're actually buying pieces of the company which are part of the Nifty 50. You need to understand this, because what is this? The NSE decides, which runs Nifty, decides which companies should be featured in the Nifty 50 in terms of the company's capitalization, importance to the economy, and what the brand or the company means to India. It decides with a group of people, and that panel decides which company should be included, which one should be excluded. The second thing they decide is known as a weightage. So the second part of being in the Nifty 50 is amount of the 100 rupees, let's say you're putting, allocating to the shares, 50 shares, how much should get allocated to each sector, then how much should get allocated to each company in that sector is decided by the team. So that means in basic, they are your fund managers. The NSE committee which decides the index is the committee who are your fund managers. They're the ones who decide which companies are there, which companies are outside, how much should be invested in which company when the stocks are selected. Recent changes are quite significant, to say, in the short term. But in the long term, these changes are normal. Yes, there are people who are saying it should be done. There are people who are saying it should not be done. But do realize, in the history of Nifty 50, I'll ask Rupesh to put up an infographic about it, how much it has changed over the years, the companies which have come, the companies which have gone, you can see in that infographic. So what's happened recently is Zomato and Jio Financials has been brought into the Nifty 50, while Britannia Industries and Bharat Petroleum Corporation has been taken out. So this new will create inflows of 391 million towards Zomato and 200 million towards Jio Financial, while removing Britannia Industries and Bharat Petroleum will set an outflow of 463 million. There's also been changes in the weightage which I was talking about. The weightage has been increased for the Grasim, Adani Enterprises, Ultratech Cement and Cipla. So the committee has said for these four companies, more of the money should be invested in terms of percentage to these companies, while the weightages have been decreased for Bajaj Finance, HDFC Bank, Reliance Industries, ICICI Bank and Infosys. So what does this mean? These figures I've been talking about are in millions. When I'm saying million, I mean in dollars. So what is the impact of this rejigging which has happened so far? Well, the Nifty PE has fundamentally changed because of this rejigging which has happened. The PE has increased from 19.9 to 20.2. That means it's become more expensive. Why has it happened? Because it's in the equation, right? Price to earnings. That means has the overall price come down, or what has happened? Well, the overall EPS, that is the earnings per share, the composite of these companies has come down from 1186 to 1171. They have not only done this, they have also changed it in the Nifty Next 50, which is as inclusion of Indian Hotels, Britannia, BPCL and CG Power and Hyundai Motors India, Bajaj Housing Finance and Swiggy, and NHPC has been removed and BHEL has been removed. Same way in the Nifty Bank Index, the weightages have been increased for Federal Bank and State Bank of India. That means more money has to be allocated towards those. And the weightages of Kotak Mahindra Bank and ICICI Bank, Axis Bank and HDFC have been reduced. Meanwhile, the Nifty Index, IT Index, they have included Oracle Financial Services software and they have removed L&T Technology software. And the Nifty Midcap 150, they have added in Ola Electric, Glenmark Pharmaceuticals, NPTC Green and another 17 other companies which have been included into that. So keep this in mind. This happens periodically. These committees meet and they decide which new companies should be included, which new companies should be pulled down, what are the weightages should be done, and this has a direct impact on your investment because these are the companies you're actually investing into. So that you should keep in mind. But what you should also remember is when you're investing in the long term, these kinds of changes are very normal and are to be expected. What happens to your passive fund now? Well, nothing really happens to you if you've been investing all this time. You continue doing the same thing. The fund companies which are doing the investment for you, they in turn will have to sell their holdings. So let's say you've bought Nifty 50 UTI. What UTI will do is they'll say, okay, now this company has been removed from the Nifty 50. They will sell their holdings which they've been holding passively for this. They'll sell those and they will buy more of those. If the weightages have been increased and decreased for one, once the weightages have been decreased, they will sell those shares and they'll buy the weightages which have been increased. This will have a direct impact in the stock market for retail investors like you and me. If you have been thinking of buying, let's say, Britannia Industries, for a long time if you've been waiting, this might be an opportunity because Britannia Industries has been removed. So all the mutual fund houses which have passive index fund, since Britannia has been out, they will be forced to sell all those holdings they have, and that will put price pressure on Britannia Industries. Same way, let's say you're holding Zomato, right? And you will see a sudden increase in price of Zomato because all these mutual fund houses which have passive Nifty fund, now they will be mandated to buy Zomato of certain percentage value of their portfolio. So all of them will be buying Zomato, trying to buy Zomato to make sure they meet the requirement. So there will be price pressure on Zomato to go up. So these things happen in the market when this rejig happens, does open up opportunities for retail investors who have been looking at a certain stock, a certain share. This gives you an opportunity to invest. So this is what it means. If you're a long-term investor, don't worry, keep investing. The companies that you were investing in before, some of them have left, new ones have come in. You are part owners of these new companies and you continue investing. As you do for the next 10, 15 years, like I said, that's how long we should be investing passively. More companies may come, more companies may go, and it's happened in the past. Like I said in the beginning of the video, Rupesh has shown that infographic of the companies in the past and the companies which are there. We'll understand that. That is for people who are investing now. For retail investors, those of you who have been waiting to buy certain companies which have been feeling a price too expensive, this gives you an opportunity if this is something you're thinking about. This is the main two things from this news which you can keep. And this is why I said this is not noise. This is actually some signal which you should pay attention to. Other than that, I wanted to talk about Tata Motors. Tata Motors is having price pressure today in the market. I personally bought Tata Motors today because I think it's a valuable company and Mr. Market seems to be giving me more opportunities. Why did the price movement happen in Tata Motors today? It is true not only for Tata Motors, it's true for a lot of auto company stocks throughout the world who are exporting to the United States because Trump has said he's going to put a 25% tariff on all cars which are coming into the United States which is not manufactured locally, and he's saying this will be a permanent tariff. So we have to wait and watch, but these things are always announced with him and he announced with gusto and we'll have to actually see what happens. But because of the uncertainty he creates in the market, you see stocks moving and I see it's an opportunity for us. Those of you who are interested in Tata Motors is an opportunity like I did today. I hope you found this video informative and entertaining as always. I do hope you had a wonderful day and wish you a wonderful evening. See you tomorrow with something more. I did want to intend to talk about IndusInd Bank, but unfortunately the market opened with Tata Motors today and I thought I should explain to you that. So tomorrow I'll try and talk about IndusInd. Thank you for watching the video. See you again tomorrow. Bye.